This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome back, value investors. So the stock market is finally breaking out with the S&P 500 and the NASDAQ 100 hitting new all-time highs. So I thought I'd take a look this week at a simple screen that I have run recently when things have gotten really hot, and it's just value stocks at 52-week highs. So this screen looks for top ranked stocks. Number ones, strong buys, and number twos, which are the buys. So collectively, that's going to be a little over 800 companies. Then for the value component of it, it looks for a style score with a value score of A, which is the highest of the style scores. Now, the value style score includes many different components. So it kind of just encapsulates all of the value fundamentals, the PE, the price to sales ratio, price to book, PEG, a bunch of things into one score and then ranks it. So I kind of like using it for these kinds of screens occasionally because you do kind of get a bucket of valueness. It can be a little wonky than just looking for, say, the classic value screens, just those few metrics, or if you're just using PEG or price to sales, then it's not quite as narrow and it doesn't get as much off track, I feel, but I still do like to just use the style score in general because it is a little bit broader. And with the number ones and number twos, we are already over 800 stocks. And now we're going to use that style score. Now, to get the 52-week high, we are looking for stocks within 10% of it. So that's pretty close. You might have 1 or 2 days sell-off or something in there, and so you're back down to like 96% or something. So I like to use the 10% to get that highs. And running the screen, I got 20 stocks here to start July of 2025. So that was a bit more than I thought. Now, some of the names on the list were some of our old time favorites that we've been talking about a lot in 2025. So I tried to pick out 3 stocks out of the 20 that, one we have talked about, but they recently reported, so it's worth revisiting to see how they're getting the number 2 rank. And the other 2, I don't think we've talked about maybe in a long time or ever. So it's interesting right now, given that the growth stocks are so hot, as to what stocks of the value side are also breaking out or close to breaking out, and kind of what areas they're in. There was no clear-cut pattern in the industries that these stocks were in. So I'm not sure what that tells us, that we're having a broad rally here, perhaps. We're no longer in that period where we're getting, 5 home builders in one of these screens. Also because the home builders are number 4s or number 5s right now, but we're no longer, seeing groups of stocks in one area. So that's kind of good that things seem to be broadening out even amongst the value stocks. So let's just dive into the 3 stocks I pulled out of the 20. And I might mention a 4th one because I kept seeing it on a bunch of these lists, and we have talked about that one in the past, but I'll keep it for an added bonus at the end. Okay, so the first one is the company that we have talked about in the past that just reported earnings, and it was another great blockbuster by this company, and it is Carnival Cruise Lines. And the thing that you should know about Carnival, it is one of the largest cruise lines in the world. They have over 90 boats right now. These are all ocean going. I don't believe they have any river. They're mostly 100% ocean. But Carnival, ticker C as in Charles, C as in Charles L, CCL, is a number 2 right now. It's got that A style score. It also has an A for growth. So this is a little rare, right? We're getting both value and the growth. It's got C for momentum, even though it's at a 52-week high. And it's got an A overall VGM score. So what is going on at Carnival? Now, Carnival is more than just Carnival. It has numerous brands, although that is its flagship brand. It also has Cunard, which is a British brand, Holland America line. It has P&O Cruise Lines, also a British brand, Princess Cruise Lines, famous from the Love Boat era. I recently saw an advertisement on television for Princess with the theme song from the Love Boat show playing still. And then it has luxury with Seabourn. That's its smaller luxury ships. So if you are a consumer who loves cruising, but maybe you're having second thoughts about taking one in 2026 or 2027, because 2025 is mostly booked up. There's still a few straggling cruises for the fall and maybe a little bit into the winter, but not so much in the winter because that's when you have the Caribbean start to pick up. But they are mostly booked for this year. So if you are looking for something and you're a little concerned about what you want to pay, they have a lot of price points that you could move down on or up if you decide, hey, I really want to go all out, and you can move up. Now, many of the Carnival customers are loyal to all of the brands and do switch ships pretty often, from what I understand. But Carnival is their main flagship ship. And so that is the name of the company. And most people think of Carnival when thinking about this company. So what are the earnings looking like? We are not seeing a pullback in the consumer, not yet. And last minute bookings, of which there are still some available, not many, but some, are strong. They're not having to discount to get those bookings for the last minute. Also, onboard spend is remaining elevated with all the cruise lines so far, but Carnival is the most recent to report earnings. So that's why we know that the consumer is still spending on board. They're not cutting back on the spas, the excursions, or any of those items really. So this is good to know, because people were really concerned that the consumer would be cutting back right now, but at least on cruising, they are not. So what do the stats look like? Again, they did just report earnings, so they're pretty fresh here. That's why we got the Zacks number 2 by 7 estimates are higher in the last 7 days for this fiscal year, 5 for next fiscal year, because it is still just looking that bullish and their yields remain high. So we are seeing a 38% growth in the earnings expected for this fiscal year, and then another 13% for next fiscal year. Now, where does the valueness come here? It has a PE of only 14.3. Before the earnings, it was trading around 12.5 times. So it has busted out to 1-year highs, 52-week highs, which is what our screen looked for. And it's trading at 91.5% of those highs. And it is not yet back to 5-year highs, which actually occurred in 2021. Remember the demand once the vaccine happened and some of the travel started to reopen. Demand was fierce, even for cruising back during the pandemic. So we had a real boost in the shares back then. And it's trying to get back there. It's not far off of those highs, but got a little ways to go still. But that's why we have some value here, because it's not stretched and those earnings are rising. And we had that A style score for the growth. And that's probably because the PEG ratio is 0.6 here. And remember, a PEG ratio, which is the PE divided by the growth. And you want that to be 1 or less, because then you are getting the cheapest PEG ratio you can. So either you're getting a tremendous amount of growth or you're getting a really low PE, some kind of combination of those things. That is pretty rare. The PEG ratio was actually started by Benjamin Graham, Warren Buffett's mentor, and considered to be the father of value investing. So I do like to use it, as many of you know, on this podcast to find stocks. So I'm glad to see that Carnival also has that low PEG ratio here of just 0.6. It does not pay a dividend, I don't believe. Let me check real quick. I don't think it does. No dividend, but you are basically buying the cheapness. Carnival has a lot of debt. I know many of you don't like buying companies with a lot of debt. So you'll start to dig deep into Carnival and be like, no, Tracy, I can't buy this one. But they have been paying it off with some of their free cash flow that is happening right now with these record quarters and now record years that they are producing with the strong demand. So their balance sheet is looking better at Carnival. That was one of the hits against it. So I'm liking the cruise ships, like a lot of the different lines right now, but Carnival makes this list. So we're going with it. CCL is that ticker. Okay, stock number 2 is called Air Lease. It's ticker A as in Adam, L, just 2 letters. And I had to look into this one because I think I've covered it a long time ago, maybe even during the pandemic. But it's been a while. So this one's going to be kind of new to most of us. It has a market cap of 6.5 billion. So that makes it a mid cap. I looked up the March quarter, the first quarter, and they are what their name says, air leasing. They lease aircraft, and they have 487 aircraft in their own fleet. They sell or not sell, but lease to airline customers throughout the world. Aircraft are expensive. Not every airline can just afford to go out and get that new plane necessarily. So Air Lease comes in handy because they can just lease it from them. In the first quarter, they had no aircraft delivering to any country that had announced reciprocal tariffs applicable to aircraft. Now, that was as of March 31st. So a lot has gone on, as we know. And so we're going to have to just wait till this next quarter to see. But a lot of the reciprocal tariffs, as we know, also have been paused. So that shouldn't be affecting Air Lease, even though it also really wasn't in the first quarter. So second quarter, hopefully it wasn't either. They don't report again until August. Early August. So we're going to find out soon. In the first quarter, revenues were up 11.3%. So you really like to see that. And these shares are at basically the 52-week high, but also a 5-year high. They're now busting out of this narrow channel they've been in a couple of years and are starting to move higher. Now, earnings for this year are expected to be up 9.5%. But 2026 looks even more bullish, up 33.9% for 2026 on about 7% revenue growth for both years. That's pretty solid. Now, what about the value here? PE is at 10.4. So that's pretty cheap. Anything under 10 is dirt cheap, but you're hiding out or hanging out around 10. And that is very cheap here, even with the shares busting out. And we got a big relief rally after Liberation Day, along with a lot of other stocks. It has kind of been moving sideways, the stock, throughout June. And it's waiting for a next catalyst because it's not as well known as many of these big names. Now, PEG ratio of just 0.6, again, just like Carnival, that is growth and value. So we like to see it. And we now know that it is growing double digits, at least for next year on the earnings side. And it's got this low PE. So that's a good combination. So Air Lease, interesting if you are thinking that air travel is going to be expanding a bit and people are going to need more planes, then this is one to keep an eye on, and it is ticker AL. Also, just on the style score side of things, it does have a C for growth and an F for momentum. I can't figure out that momentum style score. What's in it to give a stock that's at its 52-week highs and F for momentum? Maybe because it has just been hanging out at those highs for the last month or so. And it hasn't gone down, but it hasn't gone up either. So that's a classic no momentum, right? Maybe that's why it's got the F. I'm trying to uncover what makes it get the, an A or what makes it get an F. But it has a C overall for VGM because of that F for momentum, I'm sure. But we've got the A for style scores, so it is still cheap, and it's one to keep for your watch list. Okay, and then the third one we haven't talked about, I don't think ever, Pitney Bowes. If you are working in an office, you might kind of know about it. It's a very prominent name, but it is a kind of small cap company with a market cap of just $2 billion. And they describe themselves as tech-driven company that provides shipping solutions, mailing innovations, and financial services to more than 90% of the Fortune 500. They did increase their quarterly dividend last quarter. Just to 7 cents from 6 cents, but you love to see it. You love to see dividend increases, and it's yielding 2.6%. So not too shabby. It's a little bit decent add-on to what you're getting. And it reiterated their full year outlook last quarter. So we like to see that because it was a bit of a chaos going on last quarter. The shares did sell off, but they have rebounded and now at 99% of that 52-week high. And this is right near the 5-year high. Now, this was a stock under $10. And it was during Liberation Day, it went down all the way to $8, but now it's trading over 10 at nearly 11. That is the highs. 11.24 is the all-time high, and it's at 10.92 when I'm recording this. So it's been a big rally in 2024, and now here it's reversed its sell-off, and it's now trying to bust out again. What do the earnings actually look like here? Small caps, you just never know. So we did have an earnings not good scenario over the early part of the last couple of years. So 2022 earnings were down 53%, 2023, 73%. 2024, we had some kind of massive rebound up 1,950%. So that was the turnaround year. But 2025, still expecting another 52% because it was coming off those really low levels. And that's why we're seeing a big change in the stock, where it's going. So we only have one estimate, but they made 82 cents last year, expected to make $1.25 this year. So that's where we're getting the 52% higher. They are seeing a decline in the revenue side, though, to down 25%. So that's maybe where it gets a little shaky, but stabilization maybe in 2026 with a slight gain. But they must be doing something a lot better with their margins or a higher margin business in one of their segments to get the turnaround in the earnings, but not in the sales. But still, these are going in the right direction, and it is making that $1.25, or it's expected to this year, and it's able to afford its dividend, which is 28 cents for the year, and they're expected to make $1.25. Okay, PE. It is cheap, as you might expect, 8.7 times. So we do consider that to be dirt cheap, as I was just mentioning. It's under 10. PEG ratio, again, under 1 at 0.58. So I feel like maybe the screen, after looking at these three stocks, is the value style scores are maybe under 1 there to get that A on the style scores. And what do the rest of the style scores look like? It's got a B for growth, because it definitely has that going on, and a D for momentum. It's been kind of hanging out around its high for most of June as well. So maybe that's why we're getting these low scores for momentum. Earnings coming up in August. So this is another one to tune in on. Now, I know a lot of people are kind of iffy on the mid caps and the small caps, and rightly so. They have underperformed, and we really need a rally in both of these areas. And it looks like we may be getting it soon. Okay, with that added bonus stock, I saw Copa Airlines on this screen. They have a market cap of 4.5, so they are a mid cap too. They're called Copa Holdings. Technically, CPA is the ticker there, and they are the big airlines out of Panama. And they fly to North America, Central America, South America, and that's their big hub. And they have been crushing it, trading close to their all-time highs, as well as 52-week high now, trying to break out on the 52-week high. They are dirt cheap with a forward P of 6.6, a PEG of 0.78. So they've got that growth value component. They've got a C for growth on style scores, F for momentum, because those shares are kind of in this narrow trading range once again, and it goes back to 2023. But it is so cheap, I feel like I'm willing to wait in it to see if we can get a real breakout to the 5-year highs. But dividend is juicy. They're paying $6.44 a share, which is yielding 5.9% as their business is doing well. Again, kind of like the cruises, everybody's flying, and maybe you're going to fly to get to that cruise, that cruise that's going to take you from Panama over to Cartagena. There are some cruise lines that go that direction. In fact, I might want to say it might be Holland America that is one of the ones that actually does that route. Check it out. It's a good area to visit. But earnings in 2025 expected to be up 13.9%. And then 2026, another 8.6%. I own Copa in the value investor portfolio now. Yes, airlines can be a little iffy. You're thinking back to Warren Buffett, where he refuses now to buy some airlines, although his lieutenants did buy them before the pandemic, and then Buffett made him sell. They had 4 airlines, I believe, and he made him sell them all, and they haven't gone back in. But I do like what's happening with the business, and capacity is not stretched here, so they're not over doing the different routes and adding a lot of planes. So Copa CPA is the ticker there. So let's recap the stocks we talked about that have some very good value and growthy components here, along with the high Zacks rank. That's what we want to see, and within 10% of the 52-week high. So we have Carnival, ticker CCL, Air Lease, ticker AL, Pitney Bowes, ticker PBI, Copa Holdings as a secret extra, CPA is that ticker. And as you can see, as I said at the beginning of the podcast, none of these are really in the same area, although there is kind of an aircraft component and maybe a travel component to it. But a lot of the other stocks in the 20 were not really in this area. So it's a very diverse list. I love it. And we are at all-time highs in the S&P 500. Let's get there on the small caps and the mids, and then we'll really be having a party. But there are ways to find that growth component as a value investor, and these kinds of screens can find them for you. So check out these stocks, put them on your watch list, and be sure to subscribe to the podcast to get all of our podcasts. You can get them on Zacks.com. You can go to the podcast link and click on it, and you'll see all of our podcasts right there. You can actually download the episodes right there as well. But if you just want to subscribe, you can also go to YouTube to get them. You can get the Value Investor on YouTube on our podcast page, which is separate from our video page. It's just Zacks Podcasts, and you'll see all of the podcasts there. And you can also, of course, get us on Apple, Spotify, and anywhere else you get our podcasts, including Amazon Music. So be sure to get us somewhere, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.